Hey everybody, welcome to Talk Crypto. We're back. This is our second go, and I'm hugely privileged to have Jeff with me. He's hanging out. We're going to have a drink and talk crypto. And we've got a few things on the agenda that we're going to be going through today. So first up, we're going to be talking about we're going to catch up with SBF, see what's going on there. A bit on JP Morgan and some tokenization platform that's coming out. Our Bitcoin price targets with Arthur Hayes, and what else we've got? Oh, a little bit on Fidelity. So some mainstream adoption happening, which is some sort of really bullish news. So yeah, lots to chat about, and we're just going to dive straight in. But Jeff, just come say hi to everybody. Just a quick intro.
How you doing, Ben? Thank you for having me on the stream. Welcome everybody if you're watching from wherever you are in the world. My name is Jeff Hancock. I'm co-founder and CEO of CoinPass.com. We're a FCA registered exchange here in the UK for spot crypto. We do pretty much the top assets from Bitcoin down to Solana, Cardano, etc. And stablecoins. We'll be looking after retail, corporates, institutionals, and also regionally pensioned users from all over the UK for the last 5 years. So just had our 5th birthday, which is pretty good. Not only for a small business in the UK, but also in crypto, also as an exchange. And we've just recently also been acquired by a massive CFD firm called Alamida Global Corporation. So very, very busy time for us. Still business as usual. We do not sleep for bear markets or anything else. And really looking forward to the halving coming up in April.
For sure. Yeah, we've been waiting for that. It's been a long winter.
Yeah, the winter's one thing. I mean, we knew the winter was gonna come eventually. I mean, the rise up to 65K. I can't remember the number in November
sort of 69, just short of 70, wasn't it? I think.
No, it was just short of 70. Right? Yeah.
Yeah.
That parabolic rise was nuts. There was nothing but free air holding the price up there. I think I was out at about mid 50s or something, where I kind of psyched myself out a little bit, which I did similarly after I was part of the whole ICO boom back in 2017. Yeah. And I think I got out of pretty much about 80% of my ICOs in profit, not massive profit, and some of them were 5% gain, some were 30. I had a few profit. That was back in the days where you could get in a lift, go up 10 floors and see your portfolio do 5%. It was stupid.
You know what? I've got such a funny story. I literally was I was literally speaking to my mate, and I looked at the portfolio. I went into the supermarket, came out of the supermarket, and I was about 5K richer. And I was like,
I remember the days. It was great, but we're not going to see that again. But this has been the longest, kind of ugliest winter that I've been through. This is my 3rd or 4th bear market now. I've kind of lost count. Yeah. Every single one's been different. Before this was COVID. Before this was leverage. Before that was ICO boom. Before that was Mt. Gox. It's always been wild. But this one we've had, inflation's absolutely rampant. We've got a war still on, and you've got cost of living going up. And then 3 of probably the biggest black swan events that have happened in the space in recent times. First it was Celsius, and then it was Luna, and then it was FTX. Yeah. With the same old kind of scams running rampant. So it's been a very, very tough one. And I think I definitely don't want to say that the non-financial advice, obviously. The halving is definitely not priced in. I think there's still plenty of price action that's going to happen between now in April, whenever we're kind of expecting the halving to kick off. So it's definitely not a time to be idle. It's definitely a time to be active. I would say the most activity you can do in a bear market is watch and learn. Watch the liquidity, watch the order books, see where the money's moving, keep an eye on the news, do the boring stuff, hodl, DCA, etc. But yeah, the worst thing you can do in a bear market is get sloppy and not be active. That's where you miss out on opportunities.
Do you sense there's like and we're not talking about the news yet, but this is all really interesting and I think definitely relevant to anybody who's anyone in crypto, to be fair, whether you're a newbie or being around the block. Do you think it takes a certain sort of mental toughness to sort of fight through these, two years of, a tough market. I mean, you could say Bitcoin's, I mean, it has doubled technically, hasn't it, since when it dropped down to 15 to, to 30. So in some respects,
well,
Bitcoin's been doing incredibly well. But
I don't think it takes any more mental resilience than it does for any normal investing. I mean, if you sit there and put in the $100 a month into your SIP or to your ISA or to whatever investment account you're looking at, that takes the same amount of mental, resilience to say, why am I even bothering? This compounding over 10 years is bullshit. I think
are we in too much of a rush, do you think, in this market? Do you think people
it's always a rush. I think that's just the paradigm for crypto. It's always bleeding edge, it's always fast. We see that even on the exchange side. An exchange is meant to be a very boring business, yet everyone wants to make it exciting and flashy and put heaps of lights on it and stuff. We are exchanging between I keep saying legacy, sometimes I get a lot of trouble for that, the existing financial system into the Web3 ecosystem, right? So we're bridging between fiat into crypto. Now trade, that's instantaneous, takes less than a split second. But tell me the difference between doing a withdrawal from a platform and waiting 5 minutes and 5 seconds. There's nothing, because it's still faster than international banking by far.
Sure.
So there's always this immediacy of it has to be now, and it has to be bleeding edge, and it has to be 200% yield. That's just not, it's just not real. You take a steady approach to building a scalable portfolio, like a scalable business. It will last through any bear market cycle. The whole cockroach approach, not putting your money absolutely everywhere so it doesn't grow, putting it very strategically, and educating yourself enough to kind of keep yourself out of trouble.
So why do you send me
enough to be confident to make a risk? Because if you take no risk, you will never make any money.
Yeah.
Not saying bet the farm on it, but if you've got £1,000 in your account, you could save it and do nothing, watch the value erode, or put 1,000 into one of two tokens and watch them really carefully. That's called managing risk, and what enough people aren't learning to do.
So why do we see so much I can't get the word out, capitulation whenever there's these big swings? And is it why is that? Because obviously that the correct mentality is like you said, just look at zoom out, look at the bigger picture, and
it's education and confidence, and you can liken it to playing poker, which I play a lot of poker, not so much online, mostly in person. But there are times where I get really nervous when I get I'm confident in my hand and someone raises me, and all of a sudden I'm not confident, and that's the capitulation cycle you see in crypto. People have put in a bit of money, something they've told themselves I'm willing to lose this, I'm willing to take a punt, or it's my investment, or whatever you want to tell yourself. And then as soon as it gets a bit rocky, oh crap, I made a mistake here, I'm out. So that's what we call weak hands. You don't have to be diamond hands where you're absolutely blind to the risk. But I think making that confidence push into I'm going to put £1,000 into this token, and here is my target based on my research, based on technical analysis, based on what your mate told you. It doesn't really matter. You just can't. You have to make a plan and stick to the plan. You can't make a plan, try and call it a strategy, and then bail as soon as it doesn't look very good.
Exactly.
You shouldn't do that in life. But I think it's just that, not having a resilience and the confidence in order to see it all the way through. I was buying. There's a couple of my positions I was looking at, because I'm doing my tax at the moment, very late in the year. I've got a couple of open positions from when Bitcoin was like £30,000. These are DCA ones, because I treat myself as a long only fund. So you only really take taxable events when you sell, not when you buy, in the UK anyway. So I'm looking at all the positions, I'm kind of valuing them all, and what's the value at this date, and what are my unrealized gains, and rolling it over, and blah blah blah. And I've got some positions that are £1,000, £2,000 in size when Bitcoin was £30,000, not dollars, pounds. And that doesn't make me nervous at all, because the way that I'm looking at Bitcoin specifically is I'm looking at it in a 5 or 10 year cycle. I'm not looking at it as an intraday. If I wanted some intraday trading, I'd probably do it on FX, or I'd probably do it on some other instrument. I wouldn't be doing crypto intraday.
But what's really interesting, Jeff, do you think? And I completely agree. And I'm a long-term investor. I'm looking at 5, 10 years, like you're saying. But there's clearly a huge element that don't, and it's it's trying to figure out what, are they just newbies? Are they just young? They're new investors. They're not used to it. They're not used to
leverage. Could be leverage, because when you work with leverage or margin, you're not buying the asset and holding it. You're opening a position to gamble against it. So you open up a margin trade that's 5x the money you have in there. You get 5 times the size, right? And the only way you can crystallize your entry is to exit it. You can't run a margin position forever, because you have to keep paying the interest. Same with the future, same with any derivative. It's an open and close. So maybe there's more people going into the margin or the derivative space where you open a position and you close it. And that's where the volumes kind of come in and out. There's not enough people doing boring spot where you actually buy and hold the underlying asset. Like, that's what I do. I want to hold
that's exactly what I do. I'm literally probably the most boring investor. But for me, genuinely, I just want to keep things super simple. And I think I recognize that quite early in terms of the way I am, in terms of, I have a busy life, work, family, kids. I've got no interest in day trading. I've got, when you watch the movies and all the rest of it, you think, oh, that would be quite cool. When you're young and you think you can be really clever. But I've got no interest in doing any of that. Literally, I've got a plan and I'm sticking to the plan, and it's a long-term game. And it's interesting because I think, I'm not sure if you said just then or before we went live, but you've been through a few cycles. So for me, I came in late 2020. Well, we can talk about our origin story and get into crypto maybe another time or maybe later. But 2020 had 2021 was incredible. And of course, I held, and I'm still holding. I'm still accumulating, but this is my full cycle. And I think, I'm going to take lessons from that previous cycle, that previous experience to this next cycle. And I've got a better game plan, and I'll be a better investor. But certainly for me, it's all about keeping it simple.
And I suppose also portfolio construction, what part of your life are you in? The longer I kind of go on through my life and what I've seen, where there's been opportunities and where I've missed stuff and where there's tax advantage and there's maybe not just in the Bitcoin side, but other things that are in digital assets that aren't specifically just crypto. So I think the digital asset space, if we go into that a little bit, I think the digital asset space is going to be the bigger play, right? I mean, when I say digital assets, I mean, tokenized bonds, tokenized stocks, tokenized property, cars, real world assets that we see every day. When those markets start to come on chain, and that wave comes in, crypto is going to be the frothy leftover bit at the shoreline.
Yeah, and this is something about the JP Morgan thing. Here we go. Let's have a look at it. So we can maybe talk about. It's a pretty good segue to talk about this, because there's obviously tons of bullish sort of sentiment that's coming, in right now, and it's been building and building and building. And for me, it's really interesting because if you just listen to what's happening in the YouTube space, the Twitter space, there's so much negativity not that long ago, and now that sentiment is all starting to change. If you listen to all the news articles and things like that, but yeah, tell me, So obviously we've got this article, JP Morgan debuts tokenization platform, BlackRock among key clients. What have we got here? Let's have a little quick read. So United States banking giant JP Morgan debuted its in-house blockchain-based tokenization application, the Tokenized Collateral Network, TCN, on October the 11th. According to Bloomberg, TCN settled its first trade for asset management giant BlackRock. The Tokenized Collateral Network is an application that allows investors to utilize assets as collateral. Using blockchain technology, investors can transfer collateral ownership without moving assets in underlying ledgers. So, what do you make of all this? And, what's your sort of perspective? And you just sort of touching on the sort of tokenization of things.
Yeah. So, let's kind of take the story apart a little bit. They talk about, underlying ledgers. When they talk about underlying ledgers, in the crypto space, we're just thinking that little tiny USB thing on my desk. But a ledger is an accounting term. Basically the balance sheet of a company, like a database or a massive freaking spreadsheet. When big trades take places between banks, their ledgers aren't, they're their own, Barclays and Lloyds, they have their own ledgers. You know, they talk to each other over the phone or electronically, and then often they'll use some sort of clearing bank or intermediary to make sure these trades will settle. That's where you usually heard about trade T+1, T+2, and the whole system is very manual. Using a platform like this whole idea of tokenization is that they can basically look at the same ledger in real time. You know, the blockchain, the decentralized blockchain. So this is an internal blockchain not used by JP Morgan, and I think it was BlackRock in the story, right? BlackRock, JP Morgan, and any other counterparties that want to, you know, trade with them, and they can all basically see the same database at the same time. It's effectively what it is. And having real-time access to that kind of data, they can put some sort of asset on there or some sort of token on there, which can have a value, whether it's openly traded or just a marked value, it doesn't matter. And they can clear it from one wallet to another instantaneously. And they can do it while they're on the phone. It doesn't have to go through a third-party intermediary or multiple intermediaries. It's near instantaneous. And so when you start having that back office clearing, that starts seeing, you know, growth and efficiency, the markets start to take notice of that, and the markets get to benefit from it. So, I mean, look at even the normal traditional stuff. We talked about ISAs just before, which is if you're not in the UK, tax efficient way to do stocks and shares and ETF and funds investing here in the UK. I put some money in there every month for the tax reasons and for, you know, I'm trying to save for a house, etc. I have my dollar cost average that goes in there once a month, and then the money goes in, and then it sits there for about 5 days. It's £100 worth of trades, but it takes 5 days to clear those because they've got to take my money in, they have to put it on their ledger, then they have to instruct their broker, we want to buy a block of all these shares on this day at this price, and then they have to go and agree to do it, and then they have to move the money from A to B, and then they send the trade settlement back, and then they'll notify the custodian they've bought this many shares, and now they'll store with the custodian. That's like 5 or 6 different conversations that happen over 5 days versus this is happening instantaneously. Do you have the money? Yes, I do. What do you want? I want to buy this. What's the price? Here's the price. And all of that's done by API instantaneously, and then they move that token on the same network that they're both looking at in real time. So the type of efficiencies that this will bring, eventually, this will be a mainstream thing to the point where no one even talks about it anymore. Wi-Fi and internet and mobiles are all the same thing. We don't even think of the
Jeff, can I just jump in?
Wi-Fi.
Quick question, Jeff. Yeah. So that makes complete sense to me, and I'm complete layman in terms of all of this sort of stuff. But from a customer's perspective, I don't know it's taken 5 days.
Well, you do, because it says it on my platform. It says pending.
Okay,
I haven't got access to my investment.
If I put money in an ISA, I'm just going. It's almost like, do I care?
No, exactly. Do you care? Because at the time your money went in, and the time you get your stocks and shares, the price is either guaranteed at the beginning, or you just get filled in 5 days. But the fact that it sits there pending. Yeah. And I've asked this, that I know why it's pending. I've actually asked their support before why it needs 5 days to clear. And they go, oh, it has to be signed off by the investment manager. And I went, I think Neil Wooding has got better things to do than sign off my £300 into whatever I'm investing in. Like,
he just sits there all day. So,
mate, like just automate it through DocuSign. I'm not going to know the difference. You know, put it through ChatGPT. No one cares. But the fact that it sits there pending for 5 days because the market can't clear it fast enough. Because there's all these layers of inefficiencies, and those layers of inefficiencies where everyone gets paid.
So this is what my point is who's the person that cares? The customer probably doesn't care. But I think there's a bit of because there's savings. It's like more efficiency.
I think there's a bit of well, it's definitely cheaper because it takes less people and you can automate it. And I mean, as soon as electronic trading was scalable and reliable and couldn't be hacked, floor trading started to die. Now, as soon as when the markets open in the morning, 3 to 5 million trades have cleared before 9:15 in the morning. That the volume of high frequency trading that goes through like the real levels, like the NASDAQs and LSE and that kind of stuff. Now it's all electronic. So if there's any efficiencies to be made, if it gives them an extra 5 milliseconds of speed, if it can not retire someone from a job, it gives them something better to do, then of course they'll do it. Now, do they pass those savings on to their customers? Possibly not. Will they use that efficiency to, get more gain out of the market? Absolutely. If they can clear between their counterparties faster, so their collateral is not sitting there doing nothing for a day, that's another day worth of value they can get from that capital. So any efficiencies you can create, any time you can save, any days you can save, anything you can automate, you can generate more
opportunities.
Exactly. It's the same as like, with cash to bank. If you could leave it in an account that did 0, or you could leave it in an account that gave you 5% a year, what are you going to do? You're not going to leave there doing 0. You're going to put it where the 5%. It might only be 5%, but 5 is better than 0.
Yeah.
You know what I mean?
No, definitely.
And if there was one where it was, I'll give you 5.2%, but it takes 24 hours to come out, I'm still fine with that. There's all those little tiny edges of the market. That's what they'll get out of this.
So from the financial services perspective, it's going to be very much driven not from consumer demand or consumer appetite. It's going to be driven by profitability of the businesses, the banks, the organizations. And
as well as imagine the kind of products they could put on this. They trial us on one product. Cool. What else can we do? Well, actually, this opens up, we can get rid of, all of these legacy systems we've been hanging on to for so many years, because we need this system to trade with this counterparty. We need this system to do this. Suddenly they've got an out to, get out of these old COBOL databases, these old Oracle systems, whatever it's going to be.
All these systems that they need maintaining, the cost to maintain it. And
I mean, I milked that gravy train for a few years back when I was a cybersecurity engineer. I was one of the only engineers in London that was certified for Mimecast, Meraki, AirWatch, Google, and 365 at the same time. So I held 5 certifications. There's only about 3 people in London that had all 5 of them, especially the Mimecast one. Like, I think I was the second person in the UK to get that. So do a job, and they go, "What do you want for your day rate?" I said, "Well, what's your budget?" Because I wasn't. If I maximize the budget. as soon as you say a number and they agree to it, the number's too low. I learned a little bit of sales before I went into that. So I was like, "What's the budget?" "Oh, our budget's this." Like, really funny coincidence. That's exactly my number. But and it's the same thing. If you can extract 1% more yield from your assets by having efficiencies instead of selling more, it's way more easy to be efficient than trying to sell more.
So how's so I'm I've I guess a natural passion for the property market, and from whether that's from my previous financial services industry, but also as a sort of previous property investor and what have you. Family have always been involved with property. So with the archaic world of property, how I've heard it about how possibly tokenization of property is going to happen. I haven't gone down the rabbit hole. I think one thing I'm going to, I'm trying to do with this show is not try and be an expert, but if somebody can come on and Jeff, don't worry if you don't have the answer, because sometimes we don't know everything. But if you do, then great. And if you don't, we'll try and get somebody on who's specifically who knows their stuff on this side of things. But is there any sort of shed of light you can sort of share on the tokenization of property potentially?
I know a couple of people have tried it in a very unregulated, very dodgy way, i.e. they'll do a miniature ICO, they'll raise 40, 50 grand, they'll go and buy the property in their own company, they'll pretend like that ICO represents shares in the company, and then basically try and share the profits. So I think it's a noble sentiment, but it just doesn't work. There was another one. There was actually a really, really good one, and the name's going to escape me, but I'll find it after the show, and maybe you can comment it under one of your under the video tag or something like that. Yeah, it was UK based. Basically, they got a few people together, and I think they did do it on a Zoom call or something like that. But all of the steps were done on chain via a tokenization method, where they basically did a complete exchange and completion in, I think, 45 minutes.
Wow.
Of a UK property, which is pretty, I mean, consider it usually takes 3 months. I think if it was 3 days, they'd still have a pretty good record. But I think they showed that when everything was in the right order and they were using automation and they were putting everyone on the same, decentralized ledger, that, accessing all the information very quickly as possible. The lawyers could see it, the bank could see it, the land registry could see it, everyone could see it. So it went through the approval process very, very quickly. That going mainstream might be difficult because there's far too much money being a vendor in the property market than being a buyer or a seller. It's not in anyone's best interest to do it faster. And I think that's your core problem.
That's really interesting. So that sounds to me not so much tokenization, but obviously the digitalization of the purchase of property.
It's definitely. I think you're right. I think digitalization, because you could do a lot of stuff with DocuSign you couldn't do a couple of years ago, and that solves a lot of problems. But then is this document legitimate, and has it been signed by the right people? That kind of stuff I think is very important. And there's a good amount of tokenization, which will personal keys and signing stuff and etc. is very, very cool. It can be done, doesn't mean it should, or doesn't mean it will.
So with the tokenization of property, could it be like I don't know, an NFT represents a New York Manhattan apartment?
Definitely.
And and there's like 1,000 NFTs that form part of this overall ownership. Is that the sort of thing that we're talking about? I mean, whether it's on a NFT or whether it's on
a better way to do it. A better way to do that would be, instead of it being a fractional ownership, you have that property is owned by a company with one property in it, and there are 100 shares and there are 100 NFTs. That's probably a better way to do it, because then an NFT that represents something like a document, or something that's like a one of one or a one of a fixed number. Especially when it comes to shares, like one NFT equals one share. I want to be a 51% shareholder. Cool. You have to hold all 51 NFTs. That's a very simple way of kind of addressing that. I think NFTs that represent memberships, represents documentation, represents a ticket, like that stuff that happened in Paris when they played that football game the other year, and they were selling fake stuff at the front, at the front of the gates. Like, people would buy it, walk 50 yards, and realize they've been scammed. The person's already gone with like 600 euro. It was insane. Smart contracts, NFTs solve all of that. Is it real? Where did it come from? Who issued it?
Yeah, for sure. But it's interesting, isn't it? Because actually you actually think, well, do you even need an NFT or a blockchain to prove that sort of fractional share? Because you could have one company to buy a property and then just have multiple sort of directors or whatever it is within that company.
Oh yeah. That's the company level. But in terms of you want to like fractionalize an asset or something like that, it's far easier to think of it like a company structure or something like that. How do you own 100% of the property? You hold all 100 NFTs. In one wallet. It's very simple.
And I guess in my mind, and I know there's this obsession within Web3 and NFTs and all the rest of it to convert everything to Web3 NFT. But I always go back to, what's the actual use cases? Like, does it need to be a digital asset, or is there a solution in the in the existing sort of does it actually solve a problem?
Yeah, but we need to expand your mind a bit where stuff like that is relevant. And I think really interesting is when you think about digital assets, not just as physical things, but also financial products. So like, there's two platforms that I've been looking at, one for my own investing and one that I think we could integrate into CoinPass in the future as well. And they are regulated liquidity pooled instruments, which will usually be reserved for extreme high net worth investors or banks. And these are putting block capital, or like big chunks of capital, into US bonds, T-bills, overnight money market funds, those kind of things, where usually paperwork and red tape, you need at least $1 million to $5 million or something just to even get in the door. Start tokenizing, and all you're now doing is paying for a gas transaction, and you've got a regulated instrument that sits on a blockchain. You can pump as many stable coins as you want to it. You don't really have to do anything because the product is regulated. It's sitting on a blockchain. You don't really need to KYC anyone unless you want to restrict access to it. So you want to restrict access to it, sure, you put a KYC wall in front of it. So you're only dealing with legitimate people. But now the investment minimum can be $1 because you're not doing any of the paperwork. You're not.
See, that to me, that to me is a real use case, and that's really,
and that's where it gets quite interesting and quite cool, because then you're like, well, okay, so it's digital assets, but it's kind of DeFi. And I said, no, it's very DeFi because it's accessible to anybody. So getting a 4 to 5% yield on a stable asset, i.e., like okay, let's call fiat stable for a moment, because £1 is £1. Not what £1 can buy, Let's just move away from that. But suddenly, you could be taking a couple $100 out of your paycheck and put it into a DeFi product that has a yield, and the yield is based on a real world return. It's now not based on some algorithmic thing that someone came up with in a basement. It's something that's real. An overnight money market fund generates capital because it's paid for by the institutions that need the liquidity. Instead of paying themselves, now they're paying the people that are putting the money into it, i.e. people like us. Your £500 can go to work a lot harder than it could, YOLOing into a token you have no idea about, or into your ISA and it take 5 years to even see a small return. You can go into something for a short period of time and get a yield. I think that's a really interesting concept.
Has this been looked at? Is this been worked on?
It's out there right now. There's a couple of them. So there's Swarm DeFi. They're out of Germany. They do some regulated stuff under BaFin, and they have some liquid staking. I think they've got 1 or 2 US T-bill bonds, and there's another one launching in the UK. I can't remember the name of it, but it's basically, I think they're launching with a very similar money market overnight fund, trying to target something in the 4 or 5% range on stablecoin.
That's phenomenal. So,
and you can access whenever you want. There's no lock-ins, no 1 year stuff. Your gas price in, your gas price out is all smart contracts. They're protected. You've got to protect your key. Do it from your ledger with a Web3. Do it out of MetaMask. It's really up to you.
Yeah. So ultimately, they're bringing these sophisticated investment opportunities that are usually, like you said, restricted to.
And these are what you call real-world assets, tokenized real-world assets, and a financial product is an asset. I think we just have to break the mold on how we think about these. A real-world asset can be a car, a bike, a house, something like that. Yeah. It can also be a financial instrument that generates some sort of yield or reward.
Yeah, absolutely. And I think that's the area where most people don't quite understand because they're not in that world.
Yeah, it just comes from lots of reading and spending time at home and chilling out doing stuff like this.
Yeah, exactly. And watching videos like this. So cool. That's brilliant. So let's have a look at the next. What have we got? Okay. I love a bit of SBF. Is that showing SBF?
Not yet.
Let's have a look. There we go. Right.
Anthropic, yeah.
Oh man. So without going into War and Peace, I've read this article earlier. It's just a move by their lawyers are just, asking for, certain bits of evidence not to be submitted and all the rest of it. So that's not really why I'm showing it. It's just, it's a relevant new bit of news. But just generally, what's your take on old Sam Bankman fraud?
I mean, what's there to say? It's kind of like an episode of Billions. It just keeps going, right? To be honest, I'm a little bit fatigued from it. I know a lot of people lost a lot of money, and I do generally feel from it because on the malaise of it, they were Binance's biggest competitors. But it was just a pure greed play on how far you kick the can down the road. 100%. And I don't really know who was fooling with it, because maybe if you can convince enough Silicon Valley guys that you've got this money making machine out of the Bahamas or Bermuda, wherever they were based, and here's my valuation, you can take it or leave it, and everyone was piling in.
FOMO, wasn't it? It was FOMO.
And I mean, if you do that, you might feel like you're a bit of a god complex walking on water. Some of the mistakes they were making. He also didn't have a really strong governance team around him for saying no. It was kind of very bros club. Let's just do it. We can make money. We'll figure this out later. No one's going to know. Blah blah blah.
It was a real arrogance, wasn't it? I think, and I think it was deep seated. Like, he was obviously an intellectual
weird
guy.
Because you can, you watch some of his material. I don't know if it's necessarily arrogance or there's a disconnection there from reality of this is, that they're burning me. This is fine. And there was a kind of no remorse when it finally came out and it finally started crashing. And everything around was literally on fire. It was like, no, this is fine. I'm not the bad guy here. When he really truly was the bad guy.
Yeah.
You see this about his parents, about how they were involved,
Yeah.
about all the political donation stuff. I think it was on the Unchained podcast I was listening to yesterday, it might have been. There's a rumor around that he was going to potentially try and bribe Trump with like 5 billion not to run or something like that. And I was like, what? And to me, it kind of like it's like drinking water out of a fire hose. There's just too much stuff. There's too much stuff to the story. There's too many dodgy people. There's too many like layers of companies all within each other. It's just too much. It's as simple as it's just too much.
It is.
And as the trial goes on, we want Anthropic left off the evidence bit because that's one of the good stakes that are still remaining. Because he wants to try and hold on to it or something like that. But they're like, okay, we won't ask him. We'll ask Caroline instead. We'll ask the wood nymph and see what she says. And now she's talking about how they bribed Chinese officials with like Thai prostitutes or something. Like, where does it stop? Where does it stop?
It's just literally going to be on a Netflix, movie.
Can we go back to Bull Run? Can we just go back to Bull Run and put this?
But you know what though, I do think it's really important because a lot of newbies will come into this market when next year, well, over the next 18 months, 2 years probably from now, and a lot of them won't have had these experiences. And obviously there's that risk that, something similar might happen again. I mean, it might not be exactly the same, but, and it's, it would probably be different, but, I think it's really important that people don't forget. And the thing like with Celsius, Mashinsky, he's not going to court until September 24 next year. And
that was another bad one. You got caught trying to extradite and everything as well. So no, I still think there are bad actors in the space. Some of them more public than others. I think it's the non-public ones that kind of do just as much damage. The hacking groups and all that kind of stuff. Yeah. But no, I think will we have another one of these? I hope not, because crypto keeps taking blow after blow in terms of image. I would prefer, whenever I talk about, crypto, I talk more about digital assets than crypto. It has a much nicer tone to it. Crypto just has a dirty word on it. Like with the whole UK Parliament want to say they want to make UK into a crypto hub. I disagree. I think you should be calling it a digital asset hub or a DLT hub or anything but a crypto hub, because it doesn't have a good image. Crypto, unfortunately, has a bad image for these kind of actors, taking the fast road to try and get rich, trying to absorb as much capital and abscond from as much blame as possible, because it is the bleeding edge. We are on, we're on literally
the Wild West and the bleeding edge, isn't it? It's the new Gold Rush.
But at the same time, I mean, it is the next biggest innovation after the internet, and the internet's old. We haven't seen anything. We talk about fintech and stuff. Fintech is just a really glossy AI aggregator on top of existing banking. So there's not a lot of new stuff in fintech. There's some really cool stuff, don't get me wrong, but I mean, take TransferWise, or Wise as they're called now, for instance. First 6 months to a year, their transfers were 5 guys sitting around a table, trading. I've got some Aussie dollars, I've got this, and they were trading amongst themselves to do money transfers and make it look like an automated fintech. There's nothing new there. Blockchain kind of reset the stakes for everybody. And it allowed people, fortunately like myself, I was in cybersecurity. I'd done crypto for a couple of years. I'd been through the ICO stuff. I saw an opportunity to make something, and I thought I could make something better than was out there. And so that's why we started CoinPass. And it was an opportunity for me to get out of not a profession that was bad. I think the tech sector was really good. I think I'd just kind of gone as far as I could on it. And I'd always been fascinated by finance, but trying to make a career change from tech into finance in your early 30s or something like that, you either have to do it yourself or start at the bottom. And I wasn't really interested in starting at the bottom. So that's why I kind of took an opportunity to, I'm a very all-in, not gambler, but when I have a conviction about something, I go after it. And my conviction was I could do something good with this, A, with this technology, B, with the opportunity. Crypto is not regulated in the UK, it still isn't. But I knew if they were going to regulate any part of the market, it was going to be the exchanges and the on-ramps, and the kind of choke points between the old world and the new world. And yeah, we took a punt and we built something really cool that I think is really cool. And we get to be, on equal footing with some of the other biggest players in the world, because we do exactly the same thing for cheaper, if not, same price, if not cheaper, faster and more effective, because we're in the UK. And a lot of people look up to us because we have the knowledge base now. We've been doing this for over 5 years. We haven't just survived, we've thrived. That's a very rare thing to do in this business.
Well, very much so, especially, going through multiple cycles and coming out of it. I mean, what SBF, I think he started FTX in 2017 and it all blew up by 21. So
yeah,
4 years.
And we're still talking about it in 23.
Yeah.
But
this is why does it take so long to bring this person, to justice?
Legal. I just pump all the info in a chat GPT and let them give a verdict. They'll figure it out pretty quick.
Just automate it, put it on the blockchain.
But I mean,
make it decentralized. Have a vote.
I'm hoping something decent comes out of it, not just with the dust settling in the jail time and stuff. I do hope genuinely that some people get something back. Because it'd be a real shame to go through all of this just to see nothing. But on the flip side of it, if you want to look about what FTX was and how it was built and etc. It was.
Well, this is interesting actually, because you can provide a bit of an insight into it. Because obviously, from our perspective, we hear the story. Alamida was basically had an unlimited resource by tapping into the FTX, funds.
Well, not only that, they had preferential access and they had the ability to go negative balance, so they were never liquidated. So you could basically run the biggest, nastiest short position ever and never get liquidated. And it was in the code.
They could just make huge bets. And
yeah, so it's like, imagine you have a £1,000 balance on your FTX account, and you put a 100 to 1 trade. Right, so now you're allowed to trade 100 grand, in your trades. That's what 100 to 1 on 1,000 would give you. The trade goes against you, right? It's showing negative 99,000. You're like, oh crap, I'm about to get completely wiped out, right? Except you don't get wiped out. It's allowed to go. It's allowed to go to negative 150, negative 200, negative 300k, because there's no liquidation set on your account. That's what Alameda had. They had unlimited liquidity and unlimited execution. So even if their trades were all going against them, they could continue just piling, and there was no
wait for the market to come back to the.
That's what they hoped. That's what they hoped would happen. Just hope.
But that's when it all went wrong.
And you listen to this Caroline chick who's kind of hilarious. You listen to her old stuff. Oh, we don't think stop losses are a good risk management tool. Actually, they're the perfect risk management tool, so you don't get wiped out.
But the thing is, she didn't have to worry about it, obviously.
No, because there's a meme a day about it. Is like, oh my god, you're making me use customer funds. It keeps writing itself.
No, anyway. For sure.
So bad people are going away, which I think is good for the market. It's good content. Hopefully, people get their money back. One thing that didn't stop the entire time FTX was falling over was Bitcoin kept going, Ethereum kept going, our USDC and USDT volume in the UK went nuts when FTX crashed. Everyone was like, how the crap can I get my stable coin back into the UK really quick? And our account silence went nuts. USDC, USDT volume went insane. So yeah, I hope I don't need another crash to get really, really busy. But
no, yeah, I think
blockchain and crypto didn't stop. Even when Celsius crashed, even when Luna crashed. Luna's blockchain crashed. That's different. Anytime there's been one of these market cycles, Bitcoin has never skipped a beat. Ethereum hasn't skipped a beat, even after it was upgraded. And I think that's probably what has brought a lot of the institutional interest in, is that the infrastructure has never gone down and the infrastructure has been hacked. So this is something they can build on, and that's interesting.
You know what? Bitcoin is the king. That's the reality. And
Bitcoin ETH. Actually, someone said that to me a couple of years ago. Like, this is the ICO boom when I used to do a lot of mentoring online. Who's going to have the fastest blockchain? I was, well, A, who cares? B, it'll be Mastercard or Visa. And they go, they don't have a blockchain. I went, not yet, but they will. They're going to sit back for a couple of years. They're going to watch what happens. They're going to buy a few startups that give them some cool cybersecurity tech or some cool IDing data, whatever it's going to be, and they will find the best and brightest, and they will absorb whatever's out there and make it better. And now Visa and Mastercard are getting involved in blockchain and Bitcoin merchant networks and all kinds of different stuff. You know,
who are they going to be tapping into? Are they going to be using Ripple XRP, or are they going to be using?
I think they're starting simple first. They're basically, you know, because Mastercard's network's massive. As soon as they add, because when you think about a Mastercard level, right, it's not just the card you hold in your hand; it's all the thousands of different brands that link up to that network, right? And there's huge amount of different services on those Mastercard and Visa networks. So as soon as they say we're going to allow our merchants to accept Bitcoin and store it, and if they want to sell it, they can sell it, right? So as soon as they add that functionality on, it's, you know, like 6 million vendors are going to be able to accept Bitcoin as payments. You know, that's a really big deal.
Yeah,
so as soon as
massive.
they do that, and then, you know, they need someone to liquidate it, so they're going to have a range of different. You know, unfortunately, I'm not one of them. I tried. They'll have a range of vendors that will just literally do the swap for Visa. So those merchants don't even have to onboard with anybody. They just keep dealing with Visa. Visa takes their 1-2%. Bitcoin keeps moving around. Everyone's happy. So as soon as they want to start tokenizing some of their transactions or some of their collateral flows or any of their FX, they'll probably put it onto their own system to begin with, you know, an internal ledger. They might use a fork of Ethereum, something on Tezos. Yeah, they might do any number of different chains for different things, because different blockchains have good, you know, good and bad things. Some of them are good at payments. Some of them are good at store of value. Some of them are good at building on smart contracts. You know, so there's something different for all of them.
Why are they going to build their own when there's already this?
Oh no, when I say they build their own, they'll take a fork of something that's already open source. You know, so Ethereum is open source. You can take a fork of Ethereum today and make your own token.
Well, would they do that to almost test it before they?
Yeah, of course it would. Well, why not? Why wouldn't you go and test? You know, if there's, you know, 15 supercars in the parking lot and all free, wouldn't you test all of them to see which one you liked?
That's
interesting. You don't have to buy any of them. You can just test them. So if they had the ability to open source everything, then they would take a copy of everything and see what's best.
Yeah. So what about those ones which aren't open source? I can't think, you know, but you know.
Yeah. So like your everything's got a repository somewhere. You can go and look at it. But I mean, if you want to build on a public chain, yeah, you can just access it and start spinning the gas and off you go. But you'll never get any of the updates. So when it comes to the updates and stuff, they'll bring that in-house and start to develop it the way they want to do it. You know, the Visa Mastercard networks do like 24,000 transactions a second. There's no blockchain that'll touch that right now. But maybe they don't need a blockchain to do that workload right now. Maybe they need to do it for settlements, or maybe they need it for, you know, overnight collateral. They need it for some other job, you know. And it looks like Ali in the chat has a question.
Hey Ali, thanks for dropping a question. Excellent. What's up, Johnny Waves and Ali? I have a question, sir. Fire away, Ali.
Well, while I wait for the question, you want to look at the other news article. But yeah, sorry, on the Visa Mastercard stuff, they'll shop around and they'll make something that works, and they'll make it work for 6 million people first time, you know. And my biggest thing I always said back in the day was, we don't have to fight against the big institutions and the big corporates. They'll come and join us eventually, and that's what's been happening over the last few years.
So let me just understand this right. So you think they're going to be privately testing?
Oh no, they already are. They already are.
They already are. They're privately testing using, I don't know, fork of Ethereum or whatever it is.
Yeah.
Internally, testing all these different blockchains, which one works well for them, and then when they make that decision, are they going to be then going, right, we're going to use XRP, we're going to use, I don't know, whatever. Cardano, Ethereum, whatever.
Yeah, but it probably depends on what the use case is. Does it even need to be public? It probably won't be public, because why would it be? I mean, if you can publicly validate it, you know, and see the data, that might be good enough. But
so here's a question.
If they're talking about speed and, you know, trading with counterparties like big banks and stuff,
yeah,
that doesn't need to be in the public domain. So they may use a blockchain, but it might not be a public blockchain. It might be a permissioned private blockchain.
So, okay, here's a question. So I think a lot of investors will be thinking, a lot of investors, all thinking, oh, we want, our chain to be adopted by, XYZ company, because that means price go up, means Moon, means Lambo, all that type of stuff.
That's not the token issuance, yeah.
Yeah, so if it's private, then is there that benefit to the blockchain itself?
Well, yeah, because if they're adopting it and using it, that means there's going to be an interoperability somewhere down the line, or maybe not straight away, but the fact they're using it and adopting it means they're coming into the space. Now, when you build a new chain and you do a token, you're supposed to fund the development, etc., and that's why the value is supposed to go up. When someone's building it to actually make it work, they're not interested in the price of a token. They're interested in moving the tech forward to actually use it.
No, that could
and actually fulfilling some of the promises that a lot of these early companies had.
Definitely,
we're going to change the world. We're going to change supply tech and reg tech and something tech, and nothing ever happens. When you don't care about making money from it, and Visa need to accomplish and solve a problem, you're going to be sure they're going to put a lot of expensive people on it, talented people on it as well. They're going to find the best tech to do it on, and they'll deploy it to 6 to 10 million people and make it work. And if it's efficiencies, or if it's open ledger, or if it's settlements, or whatever they decide to do, or whatever they need it for, they'll get it right. So Ali's asking about, can we give some information about trading? That's a big topic, bro. And if you're asking about trading, and I mean this in the most sincere way, there's plenty of ways to learn about trading on YouTube and channels. Not really a chat like this, but I would say, if you're brand new to crypto or brand new to investing, I would decide very early whether I was an investor or a trader. A trader has a lot of time on their hands to sit there and do charts and analytics and and you have to have a win and loss mentality. Whereas an investor, you're investing over a longer term, and you might be diversifying a little bit and minimizing your risk. And I think that's what I would focus on first before I got into trading and airdrops and NFTs and too much stuff. I would just buy $10 a Bitcoin every week until I learned enough. It's probably what I would do if you're starting out.
Not financial advice.
Don't get into but yeah, don't get overheaded to trading. It's like, don't run before you can walk. I wouldn't get into trading until I had a vast amount of knowledge on my history and stuff like that. I tried trading for a while. Turns out I was crap at it. And I have tried to go back to it a few times. I can read a chart. I can read an order book. I can plot some very dodgy lines on a chart and pretend I'm a trader, but I look for some very vague entry points. And as soon as there's a 5% dip, I'm a buyer. As soon as it hits Wednesday every week, I'm a buyer. I'm very kind of boring, plain Jane, stuff like that. So I don't call myself a trader. I never will.
No,
and airdrops are free for a reason. They're not usually any good. I got a bunch of airdrops on Ethereum, like Uniswap and a bunch of those, and some of them have done really well, but I would not go out of my way to get airdrops. They're free.
And also be careful about connecting your wallet to these things as well.
Yeah, so that's a really interesting. Yeah, I could probably have another 2-hour chat about this on cybersecurity stuff alone. Never use your main wallet to connect to these airdrop things, because you are just setting yourself up for a world of hurt. And I know a lot of people that have lost a lot of money, like over £1 million for airdrops. Now, he did have £1 million stored on a MetaMask, which I've berated him over many times, but
just on his mobile phone.
Jesus. I wouldn't waste my time with airdrops. If you have a separate wallet and you leave 1 ETH in there and you let it collect stuff, then fine. But airdrops are never going to be worth anything.
Definitely.
Unless you can exit them a split second after you get them, which is very tough.
Definitely. Ali, if you get a chance to watch this again, we were chatting about this type of thing actually right at the beginning of the video. So feel free to check it out. But yeah, thanks so much for your question, because this is definitely what this channel is all about, is community engagement. You guys asking questions, and we'll look at that. I'm getting used to
famous
this.
channel for trading. No, if I gave you a famous channel for trading, that would constitute financial advice. So I can't recommend a channel for trading.
Just
I'm sure there's plenty out there for crypto trading in Google and rank by most views. Try that.
Yeah, definitely.
If you want. But I mean, I can't help you, unfortunately, bro.
Nah, but this is the thing, isn't it? There's so many new people who are constantly coming into the space, and actually, you know what? If somebody new is coming to the space right now, they are, in my view, and I might be wrong, hugely fortunate. You know, to come in at this point where the market's at this level, you know, it's, for me, I think it's incredible opportunity.
Yeah, if it feels like it's, and again, not financial advice stuff, it feels expensive now, it's going to look like a cheap market in 3 or 4 years time. Because like when we started CoinPass back in 2018, the month we launched it, no, a month after we launched it September. We had a decent September. October was okay, kind of flat. And then Bitcoin went from $5,000 down to $3,000 in like 4 days in November. And everyone's like, "We told you it wasn't going to work." Blah 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 blah. $2,000, like $2,000 per Bitcoin, and that's unfathomably cheap now. You're like, "Oh, I should have gone back and bought more." I was like, yeah, I didn't have 20 grand spare in 20.
Exactly, and I think that's the thing, isn't it, Jeff? It's like at the time, it's all relative.
Yeah,
you know?
no, it's exactly all relative, and it's quite funny because we look through, you know, our previous, you know, reporting and stuff every now and then, and we see, you know, the outbound flows of Bitcoin per day, you know, back in the day, and they're quite similar to what they are now. Like outbound, like 25 Bitcoin on, you know, like in our first year, we're doing like 25 Bitcoin a day, which it's not too bad. It's this, yeah, it's 25, 30, 50K, whatever. 25 something Bitcoin. It's a huge amount of money. Like it's insane.
Definitely.
And yeah, I mean, I remember going through my old trading accounts, clearing stuff out, and I found an account with some dust left over in it. This is like a really, really old exchange account. I hadn't logged into it in like 4 years. Luckily, it was still online. I had some Bitcoin dust in there. I had 0.35 of a Bitcoin just sitting there.
And at the time,
it's like 9,000 pounds just sitting there doing nothing. I'm like, what the fuck? I was like, withdraw straight to ledger. Forgot about that one. And yeah, I think I was doing something. I needed to buy something, and it was about 1.5 Bitcoin. This is when Bitcoin was $2,000 each. I needed to pay like a $2,000 bill or whatever.
Yeah.
And this is before CoinPass, before anything like that. And I put it on there, blah blah blah. I did a bunch of trades. Actually, I think I dumped a bunch of ETH in there and I traded it. I can't remember, but yeah, there was 0.35 of Bitcoin left in an account.
That's probably the gas fee.
And I was just, geez, back in the day, yeah, I remember the gas fees now are insane. But no, yeah, I remember I went through like literally every exchange or every wallet I ever had, which is a lot, just to check everything. So I was like, geez, I've left money on the table.
But this is the thing, isn't it, Jeff? For any of us, all of us, and the chap who just left, asked the question in the comments, is like, ultimately they're like, do I buy? How do I, is it a good time to buy? How do I trade? How do I do this? How do I do that? It's just zoom out, and we're having these conversations about a few years ago. If we can fast forward to 5-6 years from now, I mean, we're going to be having the same conversation going, hey, Jeff, do you remember when we were chatting about, Bitcoin at, 27K back in 2023? We're going, oh man, if only I knew what I know now.
Yeah, we actually, no, I think we had that, one of those anticipation problems, like really, really early on, like Bitcoin was 5K and 2K and whatever. And I think one of our UIs on mobile, the first day it ever hit, like when Bitcoin hit 10K for like the first time ever, or sorry, in our history, because it went to 20K before, blah blah blah. The UI didn't support it properly. It like moved over a bit and like broke it up. Shit, we have to support the next digit properly, or reduce the site. We had all these like UI bits. You're figuring stuff out for the first time, and now we're already planning for how does our UI look when it's, 3 digits for the price, not for your portfolio size. We have users with very large portfolios, but just little dumb things like that. Is like, oh, yeah, when Bitcoin gets to like 3 digits, like it will happen. But no, it is quite funny going back to some of those the old history stuff.
Ali,
some
your comment. I lose all my money the last day. Oh, Ali.
Don't trade then, bro. Shouldn't be trading.
Don't trade.
Don't trade.
Listen, are you I mean, what you got to think, Ali, is you're up against some serious proper traders, and unfortunately this game is a win-lose game, and a bit like poker, would you say, Jeff? So if you don't know what you're doing, just invest. Literally buy something, and just buy something good, and almost just forget about it. Be like us, be really boring investors, and have a 5-10 year horizon. That's all I can say, really. What do you reckon, Jeff?
No, I agree. Yeah, boring is pretty good. Also, especially if you go to like self-custody and doing all that kind of stuff where you self-custody your own assets, which is very, very good and very, very safe. I found it hilarious the last time I walked through San Francisco airport with my ledger around my neck, and you have to fill out that little import form. Are you carrying more than $10,000 of currency? No. Crypto, I can't tell you. So what is this? It's a USB stick. Why has it got a code on it? It's a really secure USB stick. And even if they took that ledger off me, they can't do anything with it. So I don't really care if they confiscate it. They can't unlock it. I can rebuild the private key in the car park.
Yeah.
With the spare one.
Jeff, just this sort of mentality that people have, and we were talking about it earlier. And thanks so much, Ali, for putting questions and comments in the chat. But it's almost like we were talking about earlier, is there's this tendency to want to make tons of money like tomorrow, like now. And I get that, but it's unrealistic. And I think we want to sort of try and encourage people to have a longer term view and a long term vision. And the simple way I've sort of processed it is, I don't know, say, and let's just keep the figures simple. And I'm not saying things are going to do this by any stretch of the imagination, but if you were fortunate enough to have £1,000 and you 10x'd your money and exited at the next bull run, and you made 10 grand, and then you repeat that a few times, you turn that 10 grand into 100 grand, because it's still talking about 10x's, and then you do that another cycle, 100 grand into 1 million. It doesn't take obviously it takes a few years, but actually if you have a long-term horizon, you often hear about crypto doing way more than 10x. So, I don't think it's beyond the realms of reality, and you can start with £100 and have the same principle. And even if you don't say 10x, you say 5x.
Yeah, but also that mentality of going between cycles and stuff, that also the way, maybe you're explaining it a different way. The way you're explaining it there is almost like timing the market. So you're buying through this bit and you'd sell off and then 10x it again.
Yeah.
Going for a 10x mentality, that's almost a trader's mindset. If you were investing the same amount every single month, right? So when payday comes in, first things that come out, investing capital comes out first, rent and livables comes out second, and then whatever's left over is your fund money. Right, and all mine are based on percentages. So I know that my investing capital comes out first. That's at the moment quite a large percentage of my paycheck, and then X percentage goes towards living and basic budget, and I don't go over it. And the rest of it is leftover cash, and the leftover cash at the moment, because I'm quite boring, is basically just building up an operational cash fund. So if I had to take 6 months or a year off work, I wouldn't have to sell any of my assets down, because it's probably one of the ways. I watch a lot of finance stuff on YouTube as well. Actually, one of my favorite ones, Caleb Hammer, who does the financial audits. That guy's hilarious. I love that guy. And some of the people in there that are just completely over leveraged on living paycheck to paycheck and running up their debts and stuff like that.
No, for sure. But you get my point. It's just have that, that longevity, time in the market.
Yeah, I mean longevity. it's
the accumulation and consistency over time.
But
Whatever
accumulating on a monthly or even a weekly basis, if you can muscle the automation stuff, doing that through multiple cycles where you're getting all of the the benefits of your dollar cost averaging or whatever strategy you're using on the way up, but then you're continuing to buy on the way down, because that's when you make the most money, when there's blood on the streets. And there's been blood on the streets for nearly 2 years now. So if you weren't buying over the last 2 years, then the next market's going to look very, very expensive.
No, definitely. But I guess it brings an obvious question in the sense of, are these cycles going to be, are they going to be consistent, as we've seen them so far? Are the cycles going to change?
Well, the one thing that's never going to change is Bitcoin's predictability, because it's programmed into the code. That's something that'll never change. There is a lot of history that has kind of repeated itself. There's no reason, there's zero reason why it would repeat itself. Sometimes it's the market fallacy of, the price will probably go up, and then a lot of market activity makes it go up. So some of it's a little bit not manipulated, it's a bit self-fulfilling prophecy. It's like what is it? It's a little bit self-fulfilling prophecy. If enough people think it'll happen, it'll probably happen, right?
For sure.
And you look at some of the previous data. It's like after an all-time high, when the price comes down at least 60%, and it's 6 months before a halving, this is where the bull run starts. And it's happened 3 times in a row. So it's kind of difficult to say it's not going to happen again. But when the miners have to work quite hard to keep the network secure, and now they get paid half as much, well, the only other lever to pull is price. And when enough people pile into it, and there are no sellers in a market, and there are only buyers, price tends to go up because there's a limited amount of supply. And that's going to be one of Bitcoin's Achilles and features over the next few decades, is its supply. There is not enough to go around. So here in the UK, you're on an island, try and build houses. It's an island, bro. Can't build more islands. In Australia, we got heaps of land, right? We could build lots and lots of stuff. Not places you actually want to go, spiders and bite stuff. But
Australia's super expensive, isn't it?
Yeah, because everywhere you go that's not near the ocean's hot.
Hot.
Or there's not enough well, our problem is infrastructure. We want to talk about Australia for a second. It's infrastructure. There's not enough power and water and everything built everywhere because it's too freaking big.
Interesting.
Hey, listen, I'm 50 kilometers from Brisbane, and we only got water pipes.
What? That's crazy.
Yeah, we have water. We have a water tank on the property. It rains, we get water. If it doesn't rain, we have to buy water. Very 1970s, very retro. I like it.
Yeah, you got your cowboy hat.
Yeah, somewhere. And my big coat when it rains, it properly rains, but we have Noah's Ark kind of rain down there. None of this sprinkly stuff you have here in the UK. Anyway,
Jeff, I'm gonna bring out my Aussie cowboy hat next time we're on the live stream.
Yeah, we'll do that. We'll do an Aussie. Something big happens in the Australian news, and we'll do an Aussie edition. It'll be good.
Well, listen. On that note, I think that's a good time to sort of wrap it up.
Yeah, perfect.
And that's awesome, mate. But yeah, brilliant. Thanks so much for joining me, mate.
No, thank you for having me on. Yeah, we'll leave it a couple of months. Maybe we'll do we'll do one in the new year, or we are potentially going to have a halving party in London.
Well, excellent.
Bitcoin halving party. So that might be something.
Well, actual in-person party.
Yeah, maybe you can do a live stream from the party. That'd be cool.
Definitely, that'd be sick. That'd be good. Let us know.
Well, thank you for having me on tonight. It's always been good to connect with the audience. Everyone can kind of connect with me I'm on Twitter a little bit. I'm kind of better on LinkedIn, but you can find me at Jeff_CoinPass, or you can find me on LinkedIn. If you ever have a stupid question, please let me know. There are no stupid questions in crypto. I think everyone has the entitlement to learn, and it's still a brand new market. So if I can help you, please do reach out.
Fantastic. Brilliant. Thanks, everyone. And we'll catch up soon.
Thanks, man. See you soon.
Cheers.